Welcome back to the channel, guys. Today I'm doing my top 3 option plays for this week that I think make some pretty good money for how little risk they take on, especially if you're bullish on these companies. Uh, these are plays I'll be looking to put on next week, and that doesn't necessarily mean that they're good for you. If they don't fit your risk profile or you don't like the companies, do your own due diligence before you put on your trades. Don't just follow some person on the internet. With that said, first off, we have Virgin Galactic. I think we're looking at some pretty good opportunity here to sell some puts and maybe pick up shares at a lower price. So this is the thesis for this trade is I don't mind buying more shares at these kind of prices. And going back, even the 2-year chart here, you can see Virgin Galactic has been trading forever, like at this 14 to 16 range. We're back down to the 15-21. And over that time, many times you've seen Virgin Galactic just spike the littlest piece of news and it just shoots up. People become so super speculative. Wall Street bets goes Virgin Galactic to the moon, and we get a nice little spike. And this is kind of why I feel okay with selling pretty close to the money on Virgin Galactic, because if I get assigned shares, I can still cover costs because IV is usually high and make money off that. But also because eventually with those shares, there'll be a spike and I can sell the shares to get out. So that's kind of how I'm looking at this here. If we switch to the 1-year chart, might help if I could see it. You can see 1369 is the 52-week low. It's hit that twice so far. We're trading at 15 right now, which is not much higher than that. RSI shows that it's oversold a little bit. We're approaching that territory. And it's been selling off on lower volume than when it typically gets that price action. So volume doesn't really say that we should be getting sold off here. There's no earnings coming up, so we don't have to worry about a catalyst event from that. Although any kind of catalyst event with Virgin Galactic tends to make it go up. If we go to the Analyze tab, what I'm looking at is the January 14th $13 put. I've sold puts on Virgin Galactic already, I think at the 18 strike. I'd have to look at my portfolio to figure that out. But if I was fine buying Virgin Galactic at 18, then I better be okay buying it at 13. So that's why I'm selling more puts at 13. If you look at that premium, we could probably get filled at 55. And I think I calculated that at about 4% return for a 34-day hold. Like, that's pretty huge. And the delta for that is only 22. Again, this is a play that I'm fine buying the shares at this level. So this literally feels like free money for me. If you want to get safer, you can even shoot all the way down to the 12 or the 11 and still make a 1% return, or maybe 1.5% if you can get like a 16 fill for that at 8 delta. Like, the premium here is just awesome. So that's one that I'd be looking at. Virgin Galactic, 13 put, about a month out. You can adjust the strike to, or the date of expiration to whatever date you guys want to look at. Obviously, you can go further out in time and collect more premium, or you can get closer and look for that faster theta decay. Second on the list is Palatir. Again, this is a company that I'm bullish on long term. I think is just an awesome company that has amazing growth potential. And it's given us an opportunity to make some money in the short term by selling some puts. I sold some 22 puts that expire this week. So I'll be getting assigned at 22 up here. Again, if I'm fine buying at 22, then buying at these prices should be a blessing. Buy this dip and just load up. So I'll be looking to sell some more puts on this. And I'm looking at the 1750 mark, which is the 30 delta. Because I truly am okay buying shares at this level and doubling my size on this. I'll be looking to sell three contracts next week. And that's because I'm going to be assigned on 3 contracts at the 22 level. So I want to lower my cost basis for my shares. If you don't already have a position on this, or you're just looking at this fresh out, I'd probably go a little safer. Maybe do the 16, get the 15 delta, so 85% chance of this finishing out of the money, and you make $30 for basically doing nothing. Worst case scenario, you're buying shares at 16 minus the 30 cents, so that's 15, 70 cents for a cost basis on Palatir. That would seem awesome to me. You can still get even safer, even 15 here. We'll give you a 1% return. And a 9 delta. Like, really, I don't think you can go wrong with basically any of these strikes here. So look at Palatir. If you like the company, this could be a great opportunity to sell some premium. and make a quick buck in a month here. So Palatir was choice number 2. Stock number 3, this might be the first time that you see this on one of my top 3 videos, is American Airlines. Looking at the chart here, this is going back 1 year. Let's look at the 2-year real quick. And if we look at this, it's been trading for a long time at like the 13 range. And if we go back to the 1-year chart, recently it seems like a lot of volume happens between the 19 and 22. We're below all that at 18, so we're below all these moving averages here. Let me remove this Fibonacci for just a minute. We breached down to like 1,600 here. Sorry, not 1,600, $16 recently. Bounced off that pretty good. That looks like a support from before as well. And after it hit this level before, it just shot up within the next month and a half. So I think we're at a great spot to sell some puts on AAL. And again, this is another stock that I think if we're wrong, you take assignment of the shares and you just hold it. You just hold it because eventually the airlines, I think, will be fine. RSI is pretty neutral, maybe slightly oversold. If we was sold the puts here, that would have been awesome, but it's 18. I don't think it's too late to get into this one. If you look at the volume here, 1560, 1570, a lot of volume here, so I think it'll be slow if it does dip down to get lower than that. So basically I'm saying I don't think it's going to gap down past our strike price if it goes too crazy on us. Earnings is not until 127, so we don't have to worry about that for a while. I was looking at the 114, so again, a month out, the 1550 play. I'm sorry, 1550 put. So basically, I'll be saying I'm willing to buy 100 shares at $15.50 each. And for doing this, you're going to give me about $30 to do that. And if you look at that, it's about a 2% return for a 1-month hold. And the delta is 17. So there's an 83% chance that this expires worthless. We collect that $30 and we can go buy a lobster dinner with it or something. I don't know, whatever you want to spend your money on. You can get safer if you want to. The return goes down drastically, so this becomes 1.5%, 1% return by just going up 2 more strikes. In the delta, you only improve by 7% by going up to the 1450. So I think 1550 is kind of that sweet spot where if it does go down, it's below where I think we have support at the 1650 level here. And I think it's just going to be a trade that we just don't get tested in. So again, I think this is a pretty nice one. Remember, every contract you put on at 1550 is you saying you're willing to spend $1,550 to buy that stock. So adjust according to your account size. I'll be looking at putting on 2 of these, which would be $3,100 of notational value, which is small for my account. But if that's huge for you, maybe just do 1 of these. And I wouldn't bother doing a spread on this because I don't think we'll get tested. And if you do, you just take the shares and you hold them. And then you turn around and you sell cover calls. So if 1550 gets breached, let's say it goes down to 15, a 1-month call against it, 50 cents up would be 85 cents. So like we can attack it if it doesn't dip too far through our strike price by selling cover calls against it. So that's kind of the game plan here. Again, all 3 of these positions are ones that I would not mind owning the stock. So these are pretty safe cash secure puts for me because I want to own these stocks and I can get them at discounts if I'm wrong. Like that seems like a win-win situation. If you don't want to own the stocks, evaluate this on your end, how this would work for you. Maybe you can roll these stocks. I think all 3 of these plays, if we do get breached, we should be able to roll out in time and down in strikes to chase it down. If you don't know how to do that, look up rolling and how to do that because it's just a valuable thing to know how to do. If you have plays that you're looking at, let me know because I'd love to hear about those too in the comments below. If you like these plays, if you think about you can put them on, leave a comment. Let me know. I'd love to see that people are actually finding value in this content. And if you are finding value in this content, go ahead and click like, sub, subscribe, turn on notifications so you can get alerted when I send out a video. I'm planning to put out a bunch of videos this week just to see what days work best for my videos. So expect to see a lot come out this week, and I hope you guys have a great week, and see you tomorrow.